Let's wrap up with our last slide, in focus.
Right, so with the Bank of Japan meeting on Thursday to decide on what its next move in interest rates is and whether it will increase or amend its current QE plans, I think it'd be quite interesting to have a look at the situation there. So what would the Bank of Japan's next move be as the country moves back to recession for the second time in 2 years? Its QE expansion in 2014, which you remember was substantial, that came at the end of October, has had little obvious effect on the overall economy. Though exports have grown, the growth has been patchy, and even core inflation in the country has slipped back to negative rates in 2015. Now, the chart shows us here the Bank of Japan's balance sheet, the size of that balance sheet in the blue line versus Japan's GDP growth rate. And as you can see, that the balance sheet of the Bank of Japan is massively inflated and points up at a sharper than 45-degree angle there over the lifetime of most of the lifetime of this chart, whilst GDP has basically been trending lower since late 2011, early 2012, and has taken a turn for the worse in recent times as well. As we said at the top of the programme, has dipped back into recession. So the inference from that is that just printing money and buying government bonds back is not helping the economy, and what we really need to see, and then the Bank of Japan really has reached the limits of what monetary policy can achieve, and so we now need to see some fiscal initiatives from politicians if they're going to succeed in reviving the economy. We'll see if they can do that, but I think what the most likely outcome is that the bank does some more printing and the politicians sit pat, but we shall see.